we're going behind.
I know. Not that one. This one.
Are you tired of all the uneducated noise you're getting from the droves of YOLO meme coin peddling douchebag gurus out there trying to use you as their exit liquidity? Would you rather learn a competent university-level set of skills that will guide you in managing and investing for the rest of your life? Join us 3 days a week at Digital Investor. Develop your knowledge of game theory, cognitive bias, macroeconomics, monetary theory, investment theory, psychology of the crowds, and more. For more info on Digital Investor and how it can help you, reach out at nickblacknext.com.
All right. Let's see. Let's get this down to a level that won't blow our eardrums out. So, yeah, it's red. Remember the discussion we had a few days ago? When was it? I think it was Wednesday. We had the bull or bear market discussion. And my theory was, well, it doesn't matter what my theory was. What's your theory? So everybody in the chat, bull or bear market? You tell me. Just tell me your gut feeling, and then we'll go through the assets. We'll take a look, and we'll see again. Let's see what you got. Pew, pew. Let's see. Let's see. Yeah, I think we're in the same mindset. You got to look at it, one asset here or there can be doing some great things, but if the rest of the space, so that's where I'm at. I think we're still in a bear market, but we're transitioning. And you got a lot of macro factors at work. So the world's in a recession. Everyone except the Fed seems to want to admit it. And it doesn't matter if the Fed does or doesn't do it, because nothing they do will make any difference except to a small few people in the stock market. It makes no difference to anyone else. So everybody's like, everybody's waiting for the rate decision from the Fed this week. Who's waiting for that? They've already said they're gonna status quo. They don't care. They got their BS-BLS number. It's funny because even at the Fed, they know that those numbers are bullcrap. But it's all part of their performance theater. They're like, see, look at this jobs market. It's amazing. I'm like, why is unemployment going up? What? If there's all these strong jobs, why is unemployment going up? What? Oh, God. So the old backwards facing government officials will celebrate. And then when the BLS does their downward revision from 272,000 to 109,000 or something like that, it'll just be a little asterisk. It'll be like, oh yeah, we super lied to you guys last week. But or we super lied to you guys a few weeks ago, but no big deal. So I don't know. So there's a lot of kind of macro bad news. Credit card delinquencies really high. And now consumers are starting to use less credit card debt. You're like, oh, that's a good thing. No, it's the why. It's the reason why they're not using their credit cards, because banks are not letting them use their credit cards, or they've used all of their credit availability, so they can't use their credit cards. And over at the Fed, they're like, yeah, that's amazing. Look, people aren't using as much. No, wrong. You're getting the wrong information from that signal. When markets are doing good and you have an expanding economy with free flowing cash and credit availability, people use their credit cards to expand their lifestyle, because they assume that there's going to be more money coming in. When markets go bad, people use those same credit cards because there is no money coming in. They start living on their credit. But then the card companies and the banks, financial institutions behind them, start winding down the amount of available credit they'll extend. And they might even tell people, hey, man, we really need you to pay that back. So keep that kind of stuff in mind. And the Bitcoin front, we had 19 days of straight inflows, and then yesterday was a negative day. And it wasn't negative for all the firms. It was negative for a few. It was very negative for Grayscale. So you also have, we talked about the miners a little bit. I think that story is more important than people realize. You're having what I think some guy called it miner capitulation at this point, where the miners that can't keep up finally just said, screw it. And they're selling their Bitcoin. They're selling their reserves. Many of them may have been building reserves as the market was going up. And now they're just like, I'm out. We're bankrupt, or we're going to be bankrupt. So let's just kill this thing. So until miners sell those reserves off, and that could take, it's hard to guess what a business will do and how quick they act. But that could take 3 days. It could take a week. It's hard to nail it exactly, but not that long. So I think we're in this transition from a bearish market to a bullish market, kind of like Craig said. That's kind of where I'm thinking. And yeah, the days to green was weirdly accurate to the Bitcoin ETF decision, right? Like within a few days. Okay, in this market, will ASI launch, or will they wait? Well, they're going to launch. I mean, what you're going to, I think, see is here in a few days, the token will be available. The fetch token will transition to ASI. The other tokens, they'll just be bridges open. I think that those tokens will still function. Like those tokens will still exist. And then you'll be able to swap in and out of them back and forth. I think I don't know why you would do that exactly. It's not super clear. Yeah. So there you go. So they'll be swapping back and forth, and it looks like there'll be a Cosmos and Ethereum version. Who knows? There may even be a BNB version. I would hope not, but whatever. So yeah, so that's what's happening there, and that's going to be in a few days, just a few days. And they'll get the marketing machine going, and all of this too, all of this stuff shall pass. But you have a lot of bearish, negative, and appropriately negative news. And you had all the BS of last week, Crap and Kitty and all those idiots. And thank God that has diffused a little bit, and people have lost money again. I mean, it's not good when people lose money, but it's kind of good when dummies lose money, because maybe they won't go back to the well. But you just get this general sense that people are hopeless, and they'd rather gamble and lose than, go work an uncertain career and all this kind of stuff. It's tough to convince people out of the gambling mentality. Gambler's going to gamble. So, yeah. Ethereum is right at 3,500. Yeah, we'll go look at all this stuff in a bit. All right. Let me go through and knock out any questions. Let's see. Consolidation market. Yeah, I mean, I think we're just still in a bear market. I mean, we can go look here. Let's do this. Let me take this guy off. Let me go over here. Let's go take a look at markets. So let's look, let's go like this. I think the bear or bull argument makes more sense. By the way, we're going to talk about this transition, where your mindset should be, today's kind of classroom stuff, transitioning from a bear market into a bull market, because we're not there yet. There's lies, there's damn lies, and then there's BLS statistics. That's funny. So let's say you tell me, don't think about the 1 day. Let's go to the, push this out a little bit. Is that right? Yeah, we can do that. Okay, I'll push this out. Let's go through this, and you tell me, what do you think? Bull or bear? Let's look at the 90 day. So looking at the 90 day, down 7.5%. Bitcoin. I still think you have to argue that it's in a bull market. Bitcoin is in a bull market. Okay, we're just dealing with having and minor consolidation and some outflows and some negative Nancy's. Fair play. I'm not so worried about that. But what do you guys think? Bitcoin, bull or bear market? And just for clarity, just say BTC bull or BTC bear. BTC bull. Yeah, I think we're bull. In that asset, in that one asset. Bam, bam, bam. Okay. BTC bear. Interesting. Okay. Hey, I can't argue with you because I can't like ask you your favorite color and then tell you you're wrong. But yes, it was $16,000 last summer. We should think about that. Again, it was $16,000 last summer. By the way, any of you guys see the WWDC from Apple? Did you guys see the presentation and all the cool AI stuff they're going to infuse in their upcoming devices? Brandon's going to have to get an iPhone. Anyway, it's pretty cool. You'll be able to, use AI across all your devices in a really cool way. I use GPT 4.0 all the time. So this will be another way to use 4.0. It'll be embedded underneath Siri, and you'll be able to talk to all your documents, do all sorts of really cool stuff. But you're going to need a 15 Pro or better. So basically, I skipped last year's upgrade cycle. So I'll probably get the 16, whatever expensive hopped up piece of crap that is. I mean, I like Apple devices. I'm not a hater. Just some of the stuff they're finally rolling out seemed like it made common sense. It's like when you have a problem with your phone, why can't you ask Siri to like help you with that problem with your phone? It like before it didn't even have access to like the tech guides and all that kind of stuff. Now it will. So that's going to be pretty badass. Super badass. Okay. It's 4.0, not 4.0. That's just GPT-4, 4.0. So that's going to be pretty cool. All right. Well, let's keep looking. Let's go do this. Let's do this exercise. Let's get Ethereum. So go out to the 90 day at least, 90 day or 1 year. Ethereum, the ETFs just passed. We're in a bull market. Now we're not at the all-time highs. We're like really far away, but Ethereum, I think we're in a bull market. A specific asset bullish market, right? That's my thoughts. Bitcoin is much more complicated than ETF inflows. No, you don't look at inflows. Inflows are a reciprocal of what happened, not the reason. So you look at inflow information as kind of a reaction function to other things that happen. So yeah, it's more complicated than ETF inflows. So basically what you do is you look at the macro picture and how it influenced Bitcoin and see if the ETF inflows agree or disagree with what your assumptions were. But you can't, ETF inflows alone, not enough. It's just one among many little details. I think this is just a story about miners selling, capitulating. The price didn't go up. They needed it at a pure double. Look, everybody that was on the edge mining at just the edge of efficiency, at 38,000, they'd have to have what? 76,000. If they don't have 76,000, they slowly go bankrupt. So they have to sell their reserves. And I think that's what we're seeing. And I just, it's funny. You look into society and you see all these companies and you think, certainly they won't be this stupid. Certainly they will plan for this halving event, and they will look at their equipment, and they will look at past halvings and look at the behavior after those markets, and they will kind of come to some super basic conclusions. Like, if my equipment's not producing, $2 worth of Bitcoin for every $1 worth of investment, I'm not going to make it after the halving. So the halving happens, and they hold on, and the price goes up, and they're like, okay, we're going to get there. Maybe it's tough, but we're going to get there. And then they just don't get there. So anybody that was running right on the edge, they're blown up now. They're selling. They have financially capitulated. That is all. Unplug, sell. Some of them may sell their holdings and try to stay in business. They might try to do other tasks. I don't know what other tasks you would do with these ASIC rigs, but yeah, those are all. So that has to unwind itself. I think that's what we're dealing with. And then jitteriness in the traditional market, on the retail side, jitteriness about the Fed, about rate cuts, because people think that rate cuts are going to be awesome, which is, again, completely stupid, because rate cuts have done nothing. They've never done anything. There is a lot of scholarship, a lot of research and study, and we're talking about nothing, like fractions of basis points. So, yeah. So anyway, yes, you're very much correct, and I think people should take that into consideration. ETF inflows are a reciprocal or a reaction to activity in the greater markets, not the reason for them. ETF bull, agree. ETF bear, interesting. I guess I would say up 100% since last year, as my argument there. ETF got the green light, political or otherwise. The S1s haven't yet, but we're days or weeks away from an Ethereum ETF. To me, and we've gotten past the government hurdle that we didn't think we were going to get past until August. To me, that's bullish. XRP's in jail, bear. Doge doesn't count because it's a meme coin, and people gamble all the time. People gamble when it's up. People gamble when the markets are good, and they gamble when the markets are bad. Dogecoin means nothing. Means nothing to nobody, never, except maybe Elon, who doesn't own any. Okay, Cardano up 50%, but down 40 on the 90-day. I would argue, Cardano is the reason it's up 50%. I would say that 50 to 60% is just the market melting up in general, chasing Bitcoin, like just general market euphoria. I think Cardano is in a bear market, and nothing they seem to do makes a difference. And if it gets into the 30-cent range again, I would probably like it. Again, not advice. I'm just saying I would start looking at it as far as like one of my dollar cost averaging assets. I was going to pull the trigger a while back, and something just, what's eating you, Gilbert Grape? Well, what's eating me is that Charles whines like a little bitch every time he does a podcast. Like, stop it, dude. If you're going to turn your camera on and whine and cry like a pussy, stop it. We don't want to hear that shit. Not from a CEO. I can do it because I'm not the CEO of nothing. I ain't in charge of nothing. I can whine and complain, but your CEO, your leader, your captain, the admiral of the ship is not allowed to do that. And whining about some podcast or whining down our media coverage. Just build stuff, man. Shut up. Keep your head down and build stuff. Build stuff that is so good people have no choice but to use it. Because right now, they haven't. You know the companies that have built stuff so good that no one has any choice but to use it. I mean, it is what it is. And some of those are great companies, and some of those are companies led by like squirrels. But Cardano, unfortunately, is a great company led by kind of frustrating dude that a lot of people are not, super excited about working with. And he whines a lot and he complains a lot. And it's almost like all the good information gets buried underneath his whiny bullshit. So, Charles, I know you're not listening because you're probably busy building stuff. Stay building. Keep building, buddy. Stay off that podcast. Quit whining and crying. So that thing's probably deteriorates, but it kind of floats with the market. It might be interesting under 40 cents, I think. So we'll see. Polkadot, bear or bull? I think our line in the sand is like 60% on the year. It feels like if you're not up 60% on the year, what are you even doing with your life? Like Bitcoin nailed 106. Bitcoin's 160. If you're not up 60%, if you can't be up 60%, I think that's the line in the sand. I think anything that's not up on the year, at least 60%, is bearish. This is what I think. And yeah, Charles has a good following. The problem is those people aren't. The Cardano community is weird. It's a bunch of really well-intentioned people, but it's like no one you would take advice from. I guess that's the problem. Their key opinion leaders are not opinion leaders. I can't think of one person in the Cardano community outside of Charles that I would take advice from. Not that there's not smart people there. It's just none of their nothing. I mean, nothing. Algorand, same thing, but nothing. There's that community's giant, and it's like a giant kind of. It's not a cult like the XRP army, a bunch of dumb. I mean, let's be honest, like dumb rednecks riding around on John Deere tractors, waiting for the world to collapse so that their XRP will go to the moon. $100 a token, $500 a token. Bullshit. It's just such a stupid story. And anyway, whereas the Cardano community is a much smarter community, but it's kind of a cult too. It's more of an elitist cult, but it's almost like the people there are such super nerds that they kind of get in their own way. You can't take any of them seriously. I went to a couple of those Cardano conventions and it's just the worst. I couldn't stay there more than I didn't want to eat their food, nothing. I want to get out of there as quick as possible. I was like, I got to go, man. I gotta go. I'd rather pay valet for being here 15 minutes than stay 1 minute longer. This is really embarrassing. Ugh. And then the people presenting are terrible. It's terrible. It's not like going to an Ethereum convention or one of the big crypto conventions where it's like real companies. Maybe that's the problem. Maybe it's that the companies building into Cardano are not real companies. And we got promised all this bull stuff that never happened. Where was all these deals in Africa? All these countries that were going to start onboarding, all these students, all this stuff. Never happened. What about midnight? Well, yeah. Right, we're going to get airdrops and all this kind of stuff. It's fine if you're not going to do that, but don't start telling everyone you're going to do that and then just not do it. Like stupid. So they just made a bunch of promises they couldn't keep. And yes, their technology is cool, but it's so buried in nerddom that no one gives a crap. That's the thing. No one gives. There's zero give a crap for ADA, for Cardano. There's zero give a crap for Algorand. And what's worse, Algorand, they don't even talk. They don't say anything. They're like, we're fancy mathematicians. Yeah, and you're all stupid and broke because you're fancy mathematicians. You thumb your nose at everyone. Societal elites. Yeah, great. And no one uses your shitty platform. Why? Why would they? Why would they use it? After listening to who? After whose discussion? After, oh no, it's enterprise. Algorand's good. Enterprise, bull crap. Bull crap. Going to use some derivative of Ethereum. What's JP Morgan building on? Their little Onyx system. What's that? It's an Ethereum pivot. So like this idea that companies have to use these protocols, they would rather build their own proprietary, probably garbagey shit that at least can't be attacked rather than use crap that's out there from these companies that's battle proven. I don't know. It's very weird. The layer ones have not fared well. Well, they fared well if you bought them in the pennies, but I'm not talking about the prices. I'm just talking about the actual onboarding. Where's the onboarding? If you make a product so good that everyone has to use it, they'll use it. Look at Apple. Look at Samsung. Look at Microsoft. Look at Google. Their products are so good, you have to use them. If these crypto companies can't sort that out, it's going to always be these little half-assed nascent little culture, little group, little fandom, freaking nerd farms. Oh, my algorithms are better than your algorithms. No one gives a shit. No one cares. They want to do spammy meme coins and YOLO their paycheck. Or they want to actually have something that meaningfully changes their life. So, unfortunately, Cardano and Polkadot and, Algorand and Cosmos, they do not achieve that. The only thing, it is what it is. Spammy bullshit meme coins on Solana and Ethereum. Interestingly, did you know that Base is overtaking Solana in spammy bullshitty meme coins? Yeah, I think that's true. I think it's excellent tech that nobody uses. And so is Algorand, and so is Cosmos. Although I use Cosmos, infinitely more. I use ADA. I don't use ADA very much, man. I don't use Cardano very much. And I don't know that there's a lot of use cases that even, I know that they are building the rails for governance and all this kind of stuff. There's always, I would not be selling Cardano because it's still the most quality team building, but that doesn't matter if no one cares about your products. So it's like excellent tech, a lot of guardrails, a lot of foundational work, a lot of structural work, high integrity. No one gives a shit. But qualities, yeah, you wouldn't be, you don't want to be a net seller. But I don't know, man. Anyway, so I think, do you guys think that's fair? What do you think is the line in the sand for the percentage gain? Remember that the Bitcoin is, we'll call it 160, okay? So if Bitcoin is at 160, what do you think is the line in the sand for a bullish or bearish asset? Because I think that things that haven't at least tracked, 30, 40, 50% of what Bitcoin has done, the slowest mover in the world, if the slowest moving, highest market cap, pretty lowest utility. What do you buy it for? To have it? Why? Because it's better than government money. Cool, man. That's kind of it. That's kind of the argument. So I think if it's not at least tracking Bitcoin by half, I think you got to be, if Bitcoin's up 160, you got to be 60 or 80% just to even be tracking. So I think anything below 60 to 80% on the year, me personally, I say that's in a bear market. It's bearish. It's not keeping up. Because a lot of these assets are just going up because Bitcoin, right? So anyway, and look, there's even almost a 60% differential between Ethereum and Bitcoin. Ethereum's not been tracking. And Ethereum just got the ETF vote. And the ETF, it almost put a straight double on Bitcoin, regardless of the crappy scenario of post-halving Bitcoin, right? So that was, so what is that what you got out of Bitcoin so far was ETF hype, not halving hype. So, oh, they've delayed the launch. Well, whoever said they might delay, well played. You nailed it. Yeah, they probably don't want to launch into this crappy market. Now, okay, so let's just go through real quick. Let's get through this exercise because it's important, because I want people to make a determination of what kind of market we're in based on looking at the actual market. So XRP, yes, it's going to always be in a bear market because it's crap. Dogecoin, I mean, you could say the coin is in a bull market, but it's a spammy meme coin that has zero value, so we're not going to count that for any kind of, anything. Cardano, bear market. Polkadot, bear market. Matic, bear market. Matic actually is looking pretty, I'm looking at that. I'm looking heavy. I'm looking super. You might say I'm hungry, but not thirsty. Or maybe I'm thirsty, but not hungry. No, hungry, but not thirsty. Uniswap. It's in a bull market. I don't know why. I'm still not clear on why you would own Uniswap exactly. Because it's not really correlated to the activity on Uniswap. It's just make us rich token, I guess. I mean, it's kind of infrastructure, but you don't really own any infrastructure. But it's up 116%. So we can't really, anything that breaks, I'd say 60 or 80, that's got to be bull market. Fetch. Yes, it's down from its high by more than half, more than 50% down. Look at it's down 40% on the just on the 90-day. So it's getting its ass kicked. And this is probably not good news. This delay will probably push them down into the 140s. Well, and down 7 on the day. So today, a lot of these things are getting their ass kicked. But yeah, down 40%. But it's still an extremely bullish market, and it's AI. AI and AI adjacent. Monero, no. It's a privacy token. Again, I think that's still low-hanging fruit for politicians, things like that. So I'm going to say bear market for Monero. Render, bull market. Anything that's up to 320%, bullish. Should it be? No. Is it bullish? Yes. But instead of ish, you get it. The kind of double entendre thing. Yeah. Filecoin, right on the cusp. I think it's still, it's basically right around its ICO price. And to me, that means very investable. I just don't think the world has kind of absorbed how valuable big data is. And it's down, gosh, almost 50%. So I'm going to call this, I'm going to call Fetch, I'm going to call Filecoin a bear market. Me personally. I mean, it's at its ICO price. Remember, look at its all-time high. And is it going to get anywhere near there? No. But can it? Yes. And also, I don't think Filecoin is bullish. I don't think people are even looking at it right now. But you guys make your own determinations. Cosmos, definitely bear. Optimism. Optimism is bullish. Is it in a bull market? It's down more than 50% from its high. So I don't think it's in a bull market. It's bullish. It's up 85% on the year. It's not terrible. Now, okay, graph token. Bullish for sure. It tracked Bitcoin. It's less than 1/10 of its all-time high. So that's one I'm going to argue against the green. I'm going to say it's bullish, but I think it still remains to be seen. I think it will perform quite well in a, it'll perform quite well in a market that respects and values Ethereum, because this is directly Ethereum tied. Anyway, yeah, let's not go into that. We can go into graph later, but so yes, bullish, not bull market. It's still kind of pacing behind the Bitcoin. All right, Arweave, incredibly bullish, but this one's kind of bullish. It was, there was 2 weeks ago, it was $48, 48 or $49. The price behavior is extremely suspicious. Now, I really like the project, but the price behavior is really suspect to me, like uncomfortably suspicious. And I don't own any right now. Full disclosure, I exited that at 41 and change, 41 and a half, a little bit, but 41, 49, I think, after fees. I just didn't, I looked at the price action. It didn't make sense to me. I said, this just seems really, it doesn't pass the smell test. And again, it's cool. Parallel computing and data, it's big data. It's got a lot of applications to support AI that make a lot of sense. So again, price didn't make sense and the price behavior didn't make sense. So I think it's in a bull market. I think it just might be a bunch of bull crap. The price action, again, not the asset. The asset, the company, great. So I don't know what the fair price is. But I don't think $32 is it. I think it's probably in the, we were buying this thing just months ago at $4. Let's take a look at this thing real quick. If we go back 12 months, this does not look super organic. We went from being right around, we went from $3 or $4 and popped up to like $8 or $9, which was like, whoa. And then within a space of a few days, 3 days, 4 days, 5 days. So the 9th to the, so in 1 month, we did a 5.5x. That doesn't seem organic. And then this price behavior was very weird. 32, 42, 24, 48, 37, 44. Yeah, there were some announcements, but nothing spectacular. Just the rollout of some of their parallel compute functionality and things like that. But there's never enough money coming in here to slosh around. I don't know. Just seem also part of it is it's very hard to get that asset. You have to be on some really weird exchanges, and Binance is one of the main ones. And it probably got, there's a lot of shenanigans to go on Binance. So let's keep that in the back of your mind. Okay, Algorand, bear market. Jupiter. We don't really know, but I think Jupiter is still in a discovery market. We don't have a year's worth of analytics. I think it makes a lot of sense from a picks and shovel standpoint. I think it makes a lot of sense. I don't know what price it makes sense at. I don't know where. I was adding some much higher. I think my average price is like $1.10. So, I'm getting just waylaid, but that's why you dollar cost average into stuff so that the next time I make my Jupiter purchase, I'm getting it at 18% discount. Dollar cost average in, dollar cost average out, rules-based entry and exit. AGIX, now down in the 60s. Now starting to look, it's down over half from its all-time high. So now we're down 44%. I expect that to continue to erode down. They don't have a product. And just being AI is cool, but they don't have a product. None. No product. They kind of reneged on all their airdrop stuff. I don't know. And then the clawback and all the other nonsense with ASI. So you will expect AGIX, Ocean, they're going to track very similarly because of this ratio for swapping. Where's the opportunity? If I was going to buy one or the other, I wouldn't buy either of them right here. But anything AI is in a bullish market. So even though it's sloppy and even though, It's an AI meme coin, and a pretty good one. It's still up 233%. Even being down as low as it's still up 200 something percent. Now, most of you took 10Xs a long time ago. Some of you took your 10X take 20, 2X take 10 a long time ago. So that is good. That is a good thing. All right. I think my last exit, I'd have to go check. You know what? That's interesting. What was my last exit? My last exit. See, this is fun stuff. Let's go down. I like using the Livecoin Watch app. It's cool. Okay, come on, man. Okay, we go to the bottom. You go to transactions. By the way, for those of you that want to know how to do this on the app, if you track all your trades, you go to the bottom of the app where it says transactions. You go to view all. You can search by token and look at all of your token transactions. AGIX. I sold at, so my first, I'll tell you all of them. My 10X take 20 was 54 cents. And then it went back down. So I got a 10X take 20 at 54 cents. Remember, then it retraced. That was way back. Then it retraced. I was buying back in below 4 cents. My next 10X take 20 was at 47 cents, which I did. Then I exited my 2X take 10 at, and I broke that into two sales, part at 96 cents and part, which was the, 47 point whatever. And that was twice that. So it was like 96 cents is what I closed out at. But it was like a 95-cent trade, and then a $1.07. So I broke that into two parts. So yeah. And it never got to my next one. My next one would have been 214, and it never got there. So hence, I'm still holding the bag of this crap. Still holding a bag of this crap. All right. Flow, bear market. Oh, it's a perpetual bear. It's just a crap project. Ocean, not tracking Bitcoin and you're an AI asset. Think about that for a second. You're not tracking Bitcoin and you're an AI asset. You could argue that this whole deal with ASI punished Ocean. Ocean was actually, their team should probably get together and look at what they did. It was a very bad choice. Ponying up with these guys in this deal was a bad decision for them. It cut a lot of their future gains. And also took a nice asset out of our portfolio that we could have invested in. Zcash, Perma Bear. Sia Coin, super cheap. It's up 100%, but the data story hasn't been made yet. And at at half a penny-ish, I think I like it. And again, I have, when I have like an extra $20 or $50, I push it over to Kraken and buy some Sia Coin. I don't have a very strong position in it, but I do think that, these kind of things can move. Store J, 88%. Bullish to me, not a bull market. Bullish. Not from a high of $4. We're almost at 1/10 of its all-time high. Doesn't seem bullish to me. But does seem like there's a lot of opportunity there. I added some Store J yesterday. Not much, but I got out of, you'll probably appreciate this. I exited, although it didn't work out. I think like today, Singularity Dow is only down 4.5%, where this is down, twice that. But I went from Singularity Dow to Store J. But these are all in the AI world. How are you down? How are you down on the year when all the other assets are? It's like, how are you down? Anyway, crap. Never really got a launch out of Sophia. We don't know with Sophia. It's not a bear or bull market. They've never really had a launch. Until we get a launch, we just don't know. So we kind of just have to put a question mark there. Hypercycle, it is down, over 50% on the 90-day. So we have to say, although the weird thing about Hypercycle is I don't care so much about the token price because really for me, it's just about filling nodes and filling node licenses. So, I think you just fill node licenses. I just don't think to me, the hypercycle price is not that big of a deal. I'm not trading it like buy hypercycle token because token go up. I buy the token to put in node licenses because I'm going to get node revenue. So that's kind of a weird deal. It's almost like we need a separate category for this kind of like a strict business infrastructure play. So I wouldn't freak out. If hypercycle was 20 cents or $2.20, it wouldn't matter. Although I'd probably look back and say, I should have filled some licenses at, that 40 to 50 to 60 cent range. So there we go. Okay. Nunes. It's AI. It's in the year of this is the year of AI, man. If between last year and this year you can't be up in AI a 2x or a 3x, like what are you even doing? Oh, that's right. They don't have a product. They've never had a product. It doesn't look like they ever will have a product. Like I don't know what's going on over there. And then Crap Gito is just a crappy project, but 42%. Yeah, it's obviously bearish, and they don't have a product. So it's just spammy token behavior. So there. So that being said, what say you now? So again in the chat, are we in a bull market or a bear market? What do you guys think? Bull or bear? As I sip on this fine cafetito. I don't think that's accurate. I don't think the lower they go doesn't mean anything. The lower they go, so what? These things turn on a dime. I just don't think that matters. Sometimes the lower they go, the more attractive they look, and then people buy in. On that one, I just don't think the price. I don't think the current price matters towards the future price if you're looking at the all-time highs. But again, you have to look at the structure of the market and say, and also the company, is this the same company that had the same hope? Remember, all these prices are forward-looking. You're looking at the price and you're thinking, oh, this is the price at any one moment is where you think there's value left in it. And then it stabilizes between the people that don't think there's value and the people that do think there's value. So the people that are bidding think it hasn't been priced in, like all the information. The people that are selling thinks it has, or they're forced to sell for some other reason that's exogenous to what's going on. And in the middle, that price, the last price, that is the accurate price. Price is always right. Bitcoin is worth what people will buy and sell it for and come to an agreement on. Price consensus is always accurate. And then the question is, did you intellectually arbitrage it correctly on either side? So there is that. Anyway, I like whenever I've taken like a 10x on something and then I see it drop back below that price, I'm like, yes. Even if I'm not going to get back in the asset, still feels good to know that you kind of like hoovered up those currency units out of society. They're yours. You get them. You get them. Cardano. Oh man, it could get under 50. It could get under 40 cents. If it got under 40 cents, I'd definitely look at it. But if you're dollar cost averaging, just as a real quick thing, for those of you that are dollar cost averaging, because I think we're in a bear market, and a bear market is investable. I think we're back in a market where you can invest again. I also still believe we are 8 to 10 days away from an all-time high in Bitcoin. And that could completely rip this thing apart and just turn it into good, happy, yay market. So we'll see. But everything's getting crushed today, which is good. So what I do is I try to look at a little bit further out in time, 30 days to 90 days, to determine what I would be dollar cost averaging into. So I look at my quality assets. So I'm going to look at the relatives. Look at 90 days. Let's look at the biggest. Let's see if it'll readjust. Isn't that the down one? There we go. Okay. And so I scroll through the biggest losers on the 90-day. That helps me dollar cost average. So I go, nope, that's crap. That's crap. That's crap. Okay. If I'm filling nodes, yes, I'm adding. So And again, I'm not telling anyone what to do. I'm just telling you how I look at it when I do my own personal stuff. I'm adding to my node, my stockpile node. I want to have a master node personally. One master node completely piled up, get some cool rigs going. I want to do some of it myself, and then the rest of it I'll probably push off to like HyperPG or some of these other entities. All right. So investing, yes, no, yes. I have been buying Optimism quite a bit, and I was buying it any around 220. So it would be a 10% discount if it got to $2 again. I would lean hard. I will probably still add some Matic. So yes. So yes and yes. I'm not adding any more Algorand. I just don't think it makes sense to add to a company that's proven that it will not do anything at all. A master node, Philip, a master node is 512. 256 is a half master node. Okay. Oh, real quick. Anybody that needs, if you need tokens, like a big chunk of tokens, and you don't want to deal with the weirdnesses of like doing 25 different trades on Node Market, you can email us and we'll put together a specific order for you and we'll post it. It'll be on Node Market, but we'll post one order with a big chunk of tokens for you, and then you can go snatch them. Does that make sense? So like if you need, 256,000, 256 times 1,024, 260,000 tokens or something like that, we'll just post an order to sell 260,000 tokens, whatever the number is. And yeah, so keep that in mind. You don't have to just go through and go 10,000, 10,000, 10,000, 10,000, 27 times. All right. So Algorand for me is a no. That's a pass. NewNet is a terrible company. That's a pass. Filecoin is a yes. Sia Coin is that's my data meme coin. That's my memey spammy bullcrap. Keep in mind, this thing was almost 3 cents less than a year ago. So I don't know. To me, probably makes sense in the greater scheme of things for data. Storage A, yes, way down from my average buying price, like 55 cents. This is way down. For me, this makes a lot of sense. Yeah. So it makes a lot of sense, dollar cost averaging. And again, these are dollar cost. This is, Dale, you nailed it. It's a great DCA market. Cosmos, it's a no for me because I just don't think anyone cares how great it is. And it is great, but no one cares. AGIX is a no. I bought it at 4 cents or 3 cents. I'm not adding any. I don't care how low it goes. It's just, I just don't care how low it goes. I'm not adding AGIX anytime soon. I mean, if it got to 10 cents or something, but I don't foresee that. Graph token, probably not. Cardano, yes. Ocean, no. Fetch, no. Polkadot, no. VeChain, no. If it got to a penny. And then we're out now. We're down in the 30s, and that's nothing great there. Arweave, it'd have to be this thing have to be well into the 20s for me to take a bite at it again. Just something doesn't feel right about it. I think that $8 to $10 range is probably fair, but we're nowhere close to that. And of course, all this could turn around. Jupiter, where would I keep? I would probably continue to add. Kind of right around here, 90 cents seems fair. But everything's kind of breaking down right now. And also remember, when people are leveraged and leverage unwinds, it gets ugly. People sell their winners to pay for their losers, and you're just getting back to peak sadness. But peak sadness for us is when that's that great DCA market. So times like these, you really have to shift your thinking. So let's spend about 5 or 6 minutes talking about that mindset, that shift from where we are now, which I think most of us agree we're in a mostly bearish market, but it's that shift. That shift, I think, is what's important, and that's what we should talk about today. So let us do that. It's better there.
Hello. You're late.
Your battery
bad at math, but I'm giving you an A+ in confidence.
Just doing what I gotta do.
Extra credit.
Okay, today we focus on, if I can bring my little comment thing up. Where are you? Bam. Let's talk about transitioning from a bear market to a bull market. It is crucial for anyone interested, I mean, just in basic finance, because this can be applied to the greater macro space, whether you're in high school or stepping into the financial world, or you just got certified as an advisor. My buddy's, I think he just finished all his series stuff. Anyway, you need to be able to navigate the transition from this bear market or from bear markets into bullish markets. And understanding the transition can set you up for not only for success, but again, it can harden, it can galvanize your resolve for these kind of rules-based entry and exits. Rules-based. This is the key. So we'll start with the basics. A bear market, and we're gonna keep this very vague. Everybody's gonna have their own opinion of when to do this, that, or what, but we're gonna keep this vague. A bear market is when the prices of securities, assets, crypto, whatever sector you're looking at is falling, and pessimism is the prevailing theme. Sadness, disquietude, right? It's characterized by a decline of 20% or more from recent highs, right? Let's just call it 20%. On the other hand, a bull market is when prices are rising they're rising or expected to rise. It's marked by investor confidence, generally favorable economic conditions, the approach towards all-time highs, which again, we're only seeing in a few assets. So you need to have emotional resilience. We talk about this a lot, meaning like you need to be anti-emotional, but emotional resilience. The first aspect of the mindset that you need during these kind of transition phases from up to down or down to up is emotional resilience. During a bear market, there's a lot of fear and anxiety, and everybody's doom and gloomy and talking all sad, bastard, and all that kind of stuff. It's crucial that you just remain calm, avoid making very impulsive decisions based on your emotions. Like, got to separate those bad boys. Remember, the market's vacillations up and down are part of a natural cycle. It's violent up and violent down. Panic selling during a downturn, panic unwinds due to leverage and deleveraging, and dummies getting smoked out of their leverage positions, the YOLOs getting whacked, losses. It prevents you from benefiting when the market recovers if you panic out of stuff. So when things are going down, you DCA in. When things are going up, you DCA out. As market sentiment starts to recover, optimism can quickly turn into overconfidence. So it's essential to stay grounded and have those rules-based exits, right? Focus on your research that you did, your strategy for exiting, your DCA kind of structure, however you employ that, not just general enthusiasm and excitement. Having a plan and sticking to it, even when your emotions are going crazy, helps you stay focused and make rational decisions. You have to be a rational decision maker, a game theoretical, rational decision maker. This is the key. Okay, strategic planning. This is important. Transitioning from a bear market to a bull market requires a more strategic approach, because during the downturn, you focus on preserving capital, identifying undervalued assets. You can really look deep and kind of research your investments. You're looking for companies with good fundamentals that pass the 5 Ts. They're likely to have use, utility, and hopefully wide-scale adoption. And these are things that can bounce back as the market improves. So this is a good time to research and just to kind of roll your sleeves up and understand the different investment opportunities that are in front of you. As the market starts to recover, you're gradually shifting your strategy to capture some of that growth that you early invested in. Diversification is important, but don't, so don't put all your eggs in one basket. Also, don't have 700 baskets, because if any one asset goes up, you can't really appreciate from that. You can't benefit from that. So balance between riskier growth assets and the more stable assets, the Bitcoins and the Ethereums, things like that. This way you benefit from the growth while minimizing getting your ass kicked on these illiquid assets. Okay, this which pushes us into risk management. Any kind of risk management strategy you're going to need during any market condition. So, but especially during transitions. because understanding your risk tolerance is important so that you can set clear and realistic goals for yourself. Knowing how much risk you are comfortable with absorbing each night as you close your eyes and fall asleep will help you make better investment choices and avoid a bunch of unnecessary stress. Don't be sleepless, man. So use tools like your rules-based exits, like the 10x take 20, 2x take 10. Have those kind of cemented in your mind before we get to a bull market, so that you're not like, oh, everything's going up. I'm gonna be a trillionaire and all that. Yeah, okay, cool, man. But focus on just like, getting your exits right now and just like, pay off your car and shit. Like, make your life, better. Just make your life better. Don't worry about cloud cities yet. Like, just make your life, somewhat materially better. If you're in the regular markets, obviously stop loss orders are nice. That's a rules-based exit, right? Regularly review and adjust your portfolio. Look at all your crypto assets, and just your other assets, and just to ensure to yourself that this aligns with your amount of risk tolerance. Have a proactive approach. Don't be reactive. Don't look at the news and react. Be proactive. It'll help you kind of move around through volatility and keep your investments on track. Keep learning and adapting. So the financial world is very like dynamic and like grandma's meth addict grandma's EKG. So you need to be continuously learning. Stay informed about market trends. Read news, even if most of it's bullshit. Look at economic indicators. Look at the macro. Even if you don't think it affects crypto, everything affects everything to an extent. In true chaos, remember, everything's correlated 1.0, right? Everything's a full integer. So new investment opportunities, you should be looking at less in a bull market, more in a bear market, right? In a bull market, if you see a new opportunity, it's already been scalped, all right? Read information, look at financial news, even the boring macro stuff. Look at commodities markets just to get the flavor of it. You don't have to dig too deep, but you want to be aware of what's going on in the macro space. Consider taking courses, or playing with AI, or working with find some cool videos on YouTube that might teach very specific parts of finance that maybe in the back of your mind you were unclear about. Be adaptable. So be ready to adjust your strategies if the market conditions change. Be flexible so you can capitalize on new opportunities and mitigate a bunch of losses across the board. Remember, none of us can predict the market with any kind of real accuracy. We can just, some of us, predict the direction a little bit. So be open to change. Be willing to adapt. Don't fall in love with assets. So essentially, to boil it all down, if you're when we're transitioning from bear to a bull market, which I believe we are, it involves having emotional resilience, strongness, having a plan, an entry and exit plan. So your dollar cost entry exits, your dollar cost rules-based exits. Manage your personal risk effectively. Make sure you can sleep at night. Continually learn and adapt your strategy, and just develop these mindsets and skills. The more that you develop skills and skill sets, the less your emotions are allowed to be involved. They just are not part of the decision-making process. Rules-based entry and exit. And you're going to be much more confident about your decisions. You'll make much more informed decisions, and they will align with what your financial goals are, hopefully. So that's all I have to say about that. Okay. We will see you tomorrow. And we'll be back with Brandon. Hopefully we'll have maybe some twin news. We have some twin news, but it's not news yet. It's not cemented, but it's close. Anyway, stay in school. Don't do drugs. Don't do anything. I'm poor and solvent drunk, strung out on meth. Grandmother wouldn't do. If you guys aren't, because some of you are not in the digital investor community, you should be. We've got a lot of cool tools in the background. It's way more than just Brandon and I waxing philosophically. So on that note, stay in school. Don't do drugs. Don't do anything. My poor insolvent drunk, strung out on meth, grifter ass grandmother wouldn't do. Or Brandon, who I think it's warm there now, so he's definitely going sleeveless. Wouldn't do. And on that note, we will see you on the morrow. Pew pew.